Welcome, G-Traders. You're watching a recap of the Asian session. This week, markets are gripped by uncertainty triggered by corporate earnings and recession fears. Yesterday, on the Wall Street, stocks fluctuated widely and closed mixed. European stocks showed mixed dynamic during the day, while Japanese ones rose higher. In Australia, equities resumed a downward movement. Traders are now rather cautious, even despite hopes for a smaller rate hike. The main central banks do not provide comments on their future plans for monetary policy. As a reminder, the Fed boosted its benchmark rate to a range of 4.5%. Ahead of the Fed's meeting, federal funds futures implied traders priced two more rate hikes by 25 basis points. As a result, the rate may approach 5% by June. And the Fed also stressed that it could undertake a 75 basis point rate increase. In the comments before the two-week blackout period, Fed policymakers spoke in favor of hiking the rate to 5% or even more. The regulator will announce its rate decision on February 1st. According to the CME FedWatch tool, 97% of traders expect a 0.25% rate increase. If this scenario comes through, such a small rate hike after a series of sharp ones since early 2022 will look like a dovish move. Besides, investors and the Fed have different ideas of how long the interest rate should be capped at about 5%. While investors are anticipating a small rate hike, the US dollar is consolidating in a narrow range of 101.70 and 102.00. Today, it has already tested the resistance level of 101.50 versus its main rivals. After that, it rose slightly to 101.80. Given that on Tuesday, the US currency was rather volatile following PMI data, today and tomorrow there could be new price swings in the greenback. The PMI Manufacturing Index is a leading economic indicator of production and inflation in the country. Its growth has a positive effect on the US dollar. However, the US currency remains in the bear's claws. The Manufacturing PMI Index for January amounted to 46.8 points, remaining below the critical level of 50 points. It means that it's still contracting, so investors should be ready for new sharp movements of the US dollar index before the publication of a GDP data and other macro stats on Thursday. The yen is also hesitant to pick up a trajectory. It's consolidating in the range of 130.00 and 130.60. The main drivers for the yen are mixed results on Wall Street, the weakness of the US dollar, and the falling government bond yields. However, the difference in the monetary stance between the Bank of Japan and the Fed is facilitating a further rise in the dollar-yen pair. In the Asian session, it showed moderate growth after reversal from the weekly high of 131.10 yesterday. The pair was trading at 130.40. Overall, it's trading choppily before the release of a crucial US data. It's trying to settle at 130. Given the possible policy reversal by the Bank of Japan in several months, the bears are likely to take the upper hand. Whereas the yen and the US dollar are consolidating ahead of economic reports, the Aussie surged following inflation data. Annual inflation in Australia jumped to the highest level since the early 1990s. Food prices rose to a whopping 9.2% in the fourth quarter. It happened against the background of an increase in consumption during the winter holidays and the full recovery of the country's economy. And yesterday, Treasurer of Australia Jim Chalmers calmed the markets and said that the worst part of the inflation crisis is over. However, given the recent highs, inflation has not peaked yet. Analysts do not rule rule out the fact that the Reserve Bank of Australia will have to raise interest rates more aggressively at its next meeting in February. On Wednesday morning, the Aussie broke through the resistance level of 0.71 for the first time in the last 5 months. It soared even higher to 0.7117. In the Asian session, the AUD USD pair was moving in the upper channel of 0.7032 and 0.7125. Due to mounting inflation pressure, the quotes were hovering at 0.7102. New support levels may be located at the recent lows of 0.6872 and 0.6860. Resistance levels as seen at the previous highs of 0.7137 and 0.7283. The NZD-USD pair has an opposite dynamic. Consumer prices in New Zealand dropped to 7.2%, which was below the Reserve Bank of New Zealand's projection of 7.5%. It reinforced expectations of a less aggressive rate increases this year. The pair sank to 0.6484. In the Asian session, it was trading in the downward range of 0.6467 and 0.6507. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. See you soon.